Mr. Puri, firstly, thanks very much for speaking with us. Now, to begin with, as we speak, the winter session of Parliament has got underway. So far, we've seen no business conducted. Do you worry that in the event of the winter session also being a washout the same way the monsoon session was, that already skeptical foreign investors are going to turn extremely wary about the India story?
See, let's leave the foreign investors out of it. Fundamentally, you can't have a democracy functioning without parliament functioning. And I do believe, and I don't want to take any pot shots at anybody, but I think in a coalition framework, the parties will have to work out among themselves how to reconcile their differences and come to a common ground. That said, you have the fiscal cliff, so the US is not very much better than us. I think there are compulsions of realpolitik also that exist. But I would very much like if everybody came together. But whether that's practically possible in the real world, I don't know.
Right. So on that note, despite all the positive signals that we've seen from the government over the last couple of months, we've actually seen very little action on the ground. Now, would you put that down to the compulsion of coalition politics, where it is extremely difficult for any government to walk its talk?
Parts of it and parts not. So when you're talking about change in the way institutions function, or that you talk about, ease of doing business. If you want investment, you need ease of doing business. Some part of it, let's say the land acquisition bill or some of that where you need parliamentary approval, yes. But simplifying the procedures, that you don't need 50, 60 approvals. Some of the largest corporations in the world who have set up big businesses here, who want to bring big money, when you ask them what was their experience, I don't think I want to say what they say is their experience in setting up a project. That can be fixed. Your structural changes in your processes, in terms of making it easy for doing business, I think that can be done. Some parts can be the result of coalition, but there again, I think you have to come to a consensus. It's no point either one passing. Somebody will have to be a little magnanimous and listen to the other guy.
Right. So, away from the parliamentary process and, again, picking up on the issues you said that ought to be addressed, we've talked about inflation in India, continuing to rule at high levels. All of us agree that, demand side issues have somewhere been tamed, that it is the supply side bottlenecks that need to be addressed. These are issues that the government can do without, going through parliamentary processes or any such thing. Why do you believe we've continued to have, just rhetoric come out from the government with little action on the ground?
I think they're trying. I have to be honest, when I'm traveling, most governments are trying very hard. I was in Punjab and Haryana recently. They are trying. Everybody recognizes that you have to deliver better service to the citizen. Everybody realizes that you have to get more bang for the buck in terms of money spent on subsidies. But progress is slow, but I do believe that the intentions are very strong. Things have to happen because you have to change your cropping pattern. You have to come up with agriculture reforms. You have to bring your fiscal deficit under control. You have to move out of non-merit subsidies like fuel, which will not allow conservation of fuel. So these things have to happen, and I'm just hoping it's transition and all of us getting used to it and understanding that it's a new politics that will get you elected in the future. You take Gujarat. They've increased the price of electricity, but everybody gets electricity. I talked to farmers and they said it's more important for me to get 24-hour electricity than to get cheap electricity that is erratic. So I think these can be done. When you see the people who are elected again and again, it's performance-based. So I think the realization has to come that you are no longer going to get elected without performance. And that will definitely augur well for India. In the meantime, in the temporary basis, I'm just as concerned as you.
So GDP growth somewhere for us in India has taken a sort of a hard landing. Growth has come down significantly. Now, in the event that, we sit tight on most of the issues that need to be addressed, and supply side issues, I think, one of the biggest issues that we tend to talk about. If we sit tight, do nothing, what should we expect the new normal for growth would be?
If that happens, I don't even want to conceive of that possibility. The new normal for growth will be the death knell for India. So let's be very clear, that is not an option available for us. The new normal of growth is going to take you into the Middle Ages. Because once you start going below the 5% and you haven't solved your basic problems, you are in for big, big problems. The citizens, the politicians, everybody. So I don't even want to conceive of that scenario. I'm hoping that from here onwards, within a reasonable time frame, the growth rate issues that are important for the growth rate, the powers that we will come to a resolution. So would we see a slower growth rate, say, let's say, maybe 5.5% or below just for this year? I think it's probably going to be below 5.5. If we then get some things right, you could see 6 plus. But that option I don't even want to consider, and I don't think anybody else should be considering. Because you really have a situation where you have Bharat, you have India, you have the poor people who are already crying, and if you don't do the things for growth, I at least shudder for the consequences.
You know, Mr. Puri, you have constant conversations with people in government, with people in the corporate sector. What do you believe? What is it that they tell you? And again, what is it that you believe needs to be done to get us back on the high growth path?
See, there are two parts to it. First, I want to again stress the option of not going onto the high growth path does not exist for India. So consequently, there is no option but, and for going on to the high growth path, you have to address your fiscal deficit. In the short run through divestment, but in the longer run, you have to get GST in, you have to get the direct tax code in, you have to reduce black money. The investments have to be addressed. There is no option, election or no election, it has to be addressed. The fact that you cannot subsidize the poor by an increase in fiscal deficit is something that has to be understood by all. So, you know, this talk about that the budget will be a populist budget, etc., you can't afford it. And so that's the statements that the finance minister has made, and I hope everybody supports him, including the media now. For instance, they did the divestment and people talked about, oh, it's been done below market price. How can it be below market price? There's no market price on the company that was divested. So let's not make it difficult, because I tell you honestly, we don't have an option.
Now, just focusing on the banking sector, most bankers we spoke to a couple of months back believed that the second half of the year would look good. All of them were of the view that credit growth would pick up. We are into the second half of the year. Now, when you speak to them, most of them tell you that it's not looking as good as they thought it would. What's the HDFC Bank experience been?
I think they're right. You must understand, bankers follow the real economy. Bankers, much as you may want to malign them, are optimistic people and would think of the good of the country. So I think that assessment was based on a pickup in GDP. The pickup in GDP hasn't happened. And if that pickup doesn't happen, credit growth will slow down. Normally, credit growth is a multiplier of the GDP growth. So at that point in time, people were expecting that the growth would be closer to 6%. It would pick up, investment would... The same old issues that seem to persist, which I keep saying, we have to resolve, because unless those are resolved, GDP doesn't grow. GDP doesn't grow, credit doesn't grow. And on top of that, we have an issue now even on the deacceleration of savings. So we've got multiple issues. So has the credit growth slowed down? Yes. Has it slowed down for HDFC Bank as well? Consequent to the GDP growth rate, we normally grow at about 2.5%, 2.5 times real, plus some market share gain. So if GDP goes down, our rate of growth will go down.
Just focusing on HDFC Bank alone, you've seen your retail loan book grow by over 30% in the last quarter. The wholesale loan book has grown much slower at just above 10%. Should one view this as, you know, the bank priming itself up for a declining rate environment where you are sort of boosting your retail loan book to take advantage of interest rates when they come down?
No, fortunately, we feel that demand exceeds supply in this country. That's one. We don't try and push one sector or the other. We push on the basis of demand. Consumption demand, even today, is robust. And if you superimpose on this the fact that we have gone into the interiors of the country, we've opened far more geographies, we've changed our product range, we are seeing very robust demand there. And that's the reason why you're seeing consumer currently grow faster than corporate. But the moment industrial activity picks up, we think the growth will catch up.
Yeah, but somebody was recently saying that Asia is sowing the seeds for the next global financial crisis, driven by double-digit growth in the consumer credit space. Would you agree with that?
I would strongly disagree with that. I think we must put it in perspective, and if you give me a chance, I will also bring in your Basel III and our risk weights, because this is all linked. They are talking from a perspective where retail lending was done in a saturated market. Even today, 60 to 70% of my borrowers in retail are first-time borrowers. Loan to GDP in terms of consumer loans is somewhere in the 12 to 14%. The people that you're talking about are talking where loan to GDP ratios are in the 100%. Linked to this, we must understand that India never had a banking crisis because we did not engage in these unhealthy practices. Yet, when we're looking at it on our Basel III, we are actually prescribing norms tougher than the rest of the world, who was going to hell in a handbasket. Our risk weights are higher than the world. So, for instance, a mortgage in Hong Kong has a risk weight of 7%. We have 50% here. On a car, again, we have 125% on car loans. And we have a higher prescription for Basel III. In fact, we're probably going to become the most secure, but I don't know where we're going to get capital from if we don't look at changing our Basel and our risk weights. So in a nutshell, what I'm saying is we are an under-borrowed or leveraged economy on the consumer side. The Western experience does not apply here. And most of our loans have been given assessing his earning capability. So I disagree with that statement very strongly.
Right, so just picking up again on the point that you made. So while on the one hand there is a huge market opportunity for banks to grow their retail loan books, on the other hand, the fact that risk weightages are much higher than global counterparts, Basel III requirements are being proposed to be imposed by the RBI are much stricter than global counterparts. Would you worry that in the global context, Indian banks can become less efficient?
Not less efficient. They would provide a lower return on equity. Yes, I'm worried. And given the fact that money is fungible and it looks for the best return, raising capital is an issue. But on the other side, I also wanted to add the other dimension. If you put higher capital requirements for us, you put a higher risk weight, and you have SLR and CRR, I cannot provide cheaper loans because all of this costs me money.
So you believe this needs to change, that it needs to be relaxed to some extent?
Yes.
So what do you believe an ideal level ought to be then?
At the minimum, let's have the international norms so that at least I'm compared on an international level, because you superimpose on that the fact that we don't have a debt market here. We also have an issue in terms of financial inclusion, where we are spreading ourselves thin. We also have priority sectors. So I'm saying, let's understand that the banks going forward are critical to providing the money that is going to be required for India's growth. And we have to be sure that we give them the channels so that they have the return on equity, so that foreign money keeps coming in.
Focusing on your net interest margin, you've been able to hold it well above 4% for some time now. But as we move into a declining rate environment, what's the outlook on NIMs? Do you believe you still can hold above 4%?
Yes. If you see our NIMs over the last 18 years, they remain steady in a rising environment as well as in a falling environment. In a rising environment, we earn a little more on our free floats, which is the current and savings accounts. But the quantum of the CASA goes down because people move to fixed deposits, etc. In a declining environment, the difference between putting it in a fixed deposit and keeping it in savings is low. So the CASA goes up. Net, we find that our NIMs remain in a margin of between 4 to 4.2. So could we see a 5 basis point here or there? Yes, but above 4, I think we will maintain.
Now, also to the extent that most people in the banking system are factoring in at least a half percentage point cut on the repo rate before the end of this financial year, do you believe that banks somewhere can stand to benefit from a provisioning right back on their government security investments?
If the interest rates decline, obviously a large portion of the nationalized banking sector that has a higher duration on its SLR portfolio should be able, excess SLR and has excess SLR, should be able to get a profit on that. So I think, yes, that if on a decline in interest rate, there will be a profit on sale of investments.
Oh, but do you believe that, the other factor that can work against something like that happening is increased government borrowings in the last quarter of the year, which can somewhere upset that math?
I think the increased borrowings, or at least the tightness, if you see, has already happened. If you see the 10-year, instead of going down, it's gone up temporarily. But I do believe that it should be in the 810, 815 in the long run. But today it's in the 820, 830. But you raise an interesting point. If our fiscal deficit is not controlled, which then leads to borrowing, you could see, instead of a declining interest rate scenario, a rising interest rate scenario. We also have a further issue, that money supply has not grown because for various reasons, decline in savings, etc. If money supply doesn't grow, and even with a slowdown in credit, you still have credit deposit at 75%. It shouldn't exceed 70 because you have SLR, CRR. So I think we have an issue on money supply and deposits coming into the banking system, which will prevent, unless we are able to put in the money. So if you want 15% deposit growth, you've got to get money supply 15%. And that's what the Reserve Bank had said in the policy. But there is concern. If fiscal deficit is not brought down, then I don't think you can increase money. So all of this is linked. Then all bets are off.
Now, there seems to be a definite downward bias to interest rates going forward. When can we expect HDFC Bank to start lowering lending rates and deposit rates? And again, on the deposit rate front, do you believe you're constrained to some extent by the fact that the small savings rate is pretty much locked at 8.5%?
There is a downward bias if the fiscal deficit comes under control. There's a downward bias if there's enough money supply. If your fist doesn't come under control, and if money supply consequently doesn't increase, the downward bias is limited. The constraint on the NSE, to some extent, small saving is there, but I think the other two factors are more important. And so when will HDFC Bank lower the rates? When deposits start coming in a little more and the Reserve Bank lowers its rate.
So you're telling borrowers essentially not to be too hopeful of rates coming down in a hurry?
No, I'm telling borrowers is to work very hard on the government to reduce the fiscal deficit and consequently allow the Reserve Bank of India to recognize that and reduce the interest rate and increase money supply.
Right, now on the
Don't wait for HDFC Bank. I'm saying we are the net result of actions of bigger powers.
Okay. On the asset quality front, you were on record last year to say that analysts were exaggerating the asset quality picture for the banking industry as a whole. Today, would you stick to that stance? Because from the time you said this to now, the situation has worsened somewhat.
I had said that I had even then said, let's split what is the issue with credit quality, partly restructuring, partly the slowdown in the economy. The slowdown in the economy has not resulted in as much of an issue as we have issues relating to procedure, policy, etc., which has led to the restructuring. So the real uptick has been in the restructuring, because if you see regular growth on NPA, they've just gone from 2-point-some% to 3%. It's the restructuring that's gone from 3 to 5.5. There again, if the economy, the earlier the economy picks up, the more likely that restructuring becomes standard and the proportion that moves into NPA would be lower. But that said, the last part I said was that the size of the NPAs could be concerns for individual banks, but does not provide any systemic risk, which is valid even today.